Ripple XRP. This is explosive news. I can't believe it. Hello guys, welcome to our channel. Today in this video, we are going to discuss an important explosive news about Ripple XRP. But before we start, make sure to give this video a big thumbs up, and if you are new to the channel, don't forget to subscribe to the channel. Also, hit that bell icon so you can get notified whenever we upload a new video. For now, let's get back into the video straight away. XRP, the world's 6th largest cryptocurrency, has gained a significant retail and institutional interest in the last few months. As a result, the price of the digital asset jumped from 22 cents on the 1st of January 2021 to as high as $1.95 on 14 April 2021.
You want to win an iPhone 12, maybe a MacBook Pro? How about $500 cash? You decide. All you have to do is comment the secret hidden message somewhere in this video and leave a like on this video and subscribe to the channel so we can keep affording these giveaways.
One of the biggest reasons behind the recent recovery of XRP is its network activity. XRP whale addresses are on the move again to take advantage of the recent price surge. According to Whale Alert, an on-chain analytics and blockchain tracking firm, a leading XRP whale address moved more than 48 million coins worth approximately $56 million to an unknown wallet on Wednesday, the 1st of September 2021. The mentioned transaction was recorded on bitthump.com at 31 past midnight Universal Time. The latest transaction came nearly 1 month after two leading XRP accounts transferred nearly 124 million coins in two separate transactions. In June 2021, a well-known XRP address moved 176 million coins from an unknown wallet. In its latest quarterly report, Ripple, the San Francisco-based blockchain company, highlighted a surge in XRP whale accounts. XRP saw substantial gains in its market cap during the last 4 weeks. The overall cap of the world's 6th largest digital asset above jumped $40 billion on the 11th of August after Global Money Express, GME, joined RippleNet, the global financial network of blockchain firm Ripple. On 15 August of 2021, the cryptocurrency briefly crossed the market cap of stablecoin Tether, USDT. The current market cap of XRP stands at around $55 billion. USDT has a market cap of more than $65 billion. The latest rally in altcoins has accelerated the retail interest in XRP. In addition to the recent whale movements, the overall trading volumes of digital currency have increased significantly in the last 4 weeks. The world's top 5 digital currencies include Bitcoin, BTC, Ethereum, ETH, Cardano, ADA, Binance Coin, BNB, and Tether, USDT. Given the increasing interest around altcoins, Ripple, CC, XRP USD, and XRP are both in the spotlight today. Interest is starting to build around what the expert XRP price predictions suggest is in store for this embattled cryptocurrency. Indeed, Ripple and XRP have been engaged in a lengthy battle with regulators for some time. The U.S. Securities and Exchange Commission (SEC) versus Ripple saga has continued today, with Judge Sarah Netbird setting a noon Eastern Standard Time conference call to discuss the privilege dispute, which has been ongoing in recent months. Today, it appears Ripple investors seem to like what they're hearing, as XRP shot up nearly 3% since the conference call began. However, other news has been spurring interest in Ripple and XRP today. Reports that we could be heading into an altcoin-dominated future has many investors excited about XRP's potential moving forward. Should investors continue to shift their focus away from Bitcoin and Ethereum towards smaller-cap altcoins such as Ripple, the potential upside of these smaller-cap tokens could outperform the sector leaders. Accordingly, let's dive into where the experts think XRP could be headed. Currently, XRP trades at $1.18 per token at the time of making this video. Coinpedia lists a bullish price target of $2 by the end of the year for XRP. CoinCora thinks $10 per token isn't out of the question for XRP. However, a more conservative $1.88 to $4.67 near-term range is provided. Wallet Investor gives 1-year and 5-year forecasts of $1.57 and $3.34 respectively for XRP. As a new monthly close approaches, it appears that volatility is back among the top cryptocurrencies by market cap. Although XRP remains stagnant, the technicals show a high probability of significant price movement. Ripple's XRP token continues to consolidate within a tight trading range that is getting narrower over time. The sixth largest crypto price action over the last 20 days appears to have led to the formation of a symmetrical triangle on the daily chart. A descending trend line can be drawn along with the swing highs, while a rising trend line developed along with the swing lows. As XRP edges closer towards the triangle's apex, it suggests that a major spike in volatility is about to take place. The measurement of the height of the technical pattern's y-axis added to the breakout point projects a 31.7% price movement in either direction. Only a daily candlestick close outside of $1.17 to $1.10 range will determine where XRP is headed next. A spike in buying pressure that results in a break of the overhead resistance could see the asset rise to $1.55. But losing the $1.10 level as support may lead to a certain correction towards 75 cents. The sudden decline of large investors on the network is a negative sign for sustainable uptrend, especially when considering they hold more than 11 million worth of XRP. A further increase in selling pressure could push XRP below the underlying support at $1.10, resulting in a 31.7% retracement. Still, only a daily candlestick outside of $1.17 to $1.10 price pocket will determine where XRP heads next. Also, Ripple's legal team has filed a motion that aims to compel members of the US SEC to disclose their XRP holdings. If successful, the motion would make members of the US Securities and Exchange Commission produce documents on whether SEC employees are allowed to trade cryptocurrencies. Ripple's motion specifically seeks information about employee XRP holdings. It also aims to find the SEC's pre-clearance decisions about XRP, Bitcoin, and Ethereum. That is, data on any policy that may prevent SEC employees from trading in those cryptocurrencies. The motion allows for the SEC to provide the information anonymously, either individually or in aggregate form. According to the filing, the SEC did not adopt any policy that restricted SEC employees from trading crypto until January of 2018. This would have allowed employees to invest in Ripple's XRP token. If Ripple's accusations are correct, the SEC would have imposed stricter regulations on Ripple than it did its own employees. That fact undermines the SEC's allegations that the individual defendants were reckless in failing to determine as early as 2013 that offers and sales of XRP were securities. The filing explains. The SEC initially took action against Ripple in December of 2020 when it alleged that the company's ongoing sales of the XRP token constituted an unregistered securities offering. This is the latest development in the case. In recent months, Ripple has relied on defenses such as lack of clarity, distinctions from other SEC cases, and calling a former SEC member to testify. It is still unclear when the lawsuit is likely to end. Recent estimates from Ripple community lawyer Jeremy Hogan suggest that a summary judgment will not be reached until early 2022. Now we are going to talk about one of the oldest cryptocurrencies out there, XLM sterile lumens. Now, although all these terms are usually interchangeable, they actually refer to different things. Stellar is the network, lumens are the blockchain native tokens, and XLM is their market abbreviation, the so-called ticker. Stellar's goal is to bridge the gap between cryptocurrencies and fiat currencies by using the best of two worlds. Fiat's wide adoption and the blockchain's decentralization and speed of transactions. Unlike other projects, it doesn't look to replace fiat currencies, but instead to bring them into the new era of borderless, nearly instant, and virtual feeless transactions. So, how does it do that? Hang with me for a few minutes as we answer the question. What is Stellar XLM? Stellar is an open source network for currencies and payments. It was co-founded in 2014 by Jed McCaleb, who previously founded Ripple. and the network was launched in 2015. That's even before Ethereum. Stellar allows its users to send dollars, euros, pesos, yen, and potentially any other currency to anyone with a Stellar address, anywhere in the world, with practically zero fees in just a few seconds. And even though there are platforms nowadays that offer such transactions in traditional financial systems, Stellar does it blockchain style, decentralized and uncensored. So, how do they do that? How do they bring fiat currencies onto blockchain? Answer: by tokenization. If a Stellar user wants to send dollars to another user, they don't send actual dollars, but dollar tokens. These are tokens that live on the Stellar blockchain, have the same price as the dollar, and are backed 1-to-1 by actual dollars in a bank account dedicated to this purpose. So, when a user wants to cash out actual fiat dollars, there's always the necessary reserve to get their money. If you're thinking, Chris, that sounds a lot like stablecoins, such as Tether or DAI or USDC. Well, it's because it sort of does. In fact, Stellar boasts that they invented stablecoins before it was even a word. But there are some key differences because Stellar was built with this exact purpose in mind. It takes the concept to a whole new level. The network doesn't privilege any particular currency, but instead can be used to tokenize any currency in the world. So, on the Stellar network, you can have dollar tokens, euro tokens, yen tokens, and the list goes on and on. The tokenization process is integrated right into the network protocol and fully documented, making it extremely easy for a fintech company to issue fiat-backed tokens. In fact, anything can be tokenized in the same manner, not just currencies, gold, silver, shares, corn bushels, or your hour as a consultant. Stellar achieves that through third-party companies called anchors. These companies take on the responsibility of bridging the gap between Stellar and blockchain and traditional financial systems, either by issuing tokens or working as fiat on-off ramps or both. And in exchange for these services, they usually charge some sort of fee. The Stellar Development Foundation, which is a non-profit organization founded in 2014 by Jed McCaleb that works for the advancement and development of the network, sets some standards that all anchors should meet. These include always having a reserve that matches the issued tokens in a dedicated audited bank account, complying with local regulations, applying KYC and ML policies when on-ramping or off-ramping users, and using local bank transfers, not wire transfers. For these reasons, anchors are usually local businesses that issue a particular currency and serve customers in their specific country or region. That's not all Stellar has to offer. Users can exchange any token they hold for any other token on the Stellar network, peer-to-peer, because Stellar has a decentralized exchange, or DEX, built right into the network, with its order book and everything. All trades are atomic, meaning either both sides of the trade complete simultaneously or none does. What's more, let's say you have a business in the US and you want to pay a vendor in Mexico, but they want to be paid in pesos. You can send your tokenized dollars to them and they will be converted on the fly using the best conversion rate to their respective pesos tokens. That's it for today, guys. We will see you next time. Until then.